Our index option exchange trade option of the stock index option based on the same principle listed stock option, maybe even a similar purpose, main difference for the investment standpoint with the index option is designed to permit investors to profit from the protect against general price movement of the stock market than other individual stocks. Stock index with the method of reflecting stock number of market value of many different stock sections comply with the published in various sources, including security exchange, and the index may be designed to represent the stock market as a whole with a broad market sector or a particular industry with the computers as well. The index based on the price of all stocks and only the sample of stocks in the universe intended to represent. And a stock index, like the cost of the living index, is ordinarily expressed with the relation of the base established index originated with the base adjusted for the time to time and the reflect of such events of a capitalization chain with the component stock with the maintained continuity of the stocks are added to the drops of the index group. The adjusted generally with the design to ensure the index level change of the result of the price of change result of the trade. Different stock index with calculated with different weights. One method value weight index calculated index level of the market price for each component stock of the multiply with the number of shares outstanding. Value weighting is thus called capitalizing weighting because method of capital calculation change with the stock price. Large corporations would generally have great influence to level the index price of the small corporations. Another popular method to calculate stock index is simply to add the price of the stock of the index divided by the number of stock with disregard of the number of outstanding. Still another method of the measures daily percentage movement of the stock price average of the percentage price of all stocks included in the index. Like other options, U.S. Security Exchange, all index options issue the option clearing corporation the date of the course of the index option and approve the trading. American Stock Exchange, Chicago Board Options Exchange, NASDAQ, and the Pacific Stock Exchange, Philadelphia Stock Exchange. Stated earlier, index options are traded basically in the same manner as stock options. However, there is a substantial difference in ways the exercise is settled. When an index option is exercised, the exercise is settled the payment of cash, not by the delivery of stock. Some of the other security assigned rather obligated to pay the exercising holder in cash amount equal to the difference expressed in dollars between the closing level underlying index exercise date and the exercise price of the option multiplied by the specific index of the multiplier. For example, assume the holder of the June S&P with the 180 called the Chicago Board Options Exchange S&P 100 stock index chose the extra of the date of the index at 185 cents. The multiplier S&P 100 index at 100 assigned writer with the obligated to pay with the exercising holder entitled to receive $500 cash. Multiplier index performance function similar to the unit of trade for the stock opening determines the total value of the point difference of the exercise price for the out of the money, all in the money and current level of the underlying index. The multiplier of the 100 means 1 point difference yields $100 intrinsic value. Multiplier of the option particular index fixed for the exchange of the option first open trading. Interest rate options. The exam questions deal with the detail of the options, the contract themselves, the base on the option, treasury security, the several features of the common. They will be addressed first. That feature particular, each specific option will be discussed. Option treasury security features include issuers, all issues listed, bonds, debit, equity, issue the open option clearing corporation. Trading hours 9 a.m. to 3 p.m. Eastern Standard Time, 8 a.m. to 2 p.m. Central Time. Settlement due dates, option trade, next business day, exercise sales, settlement method, security transfer, Federal Reserve wire system payment is made with the federal funds deposited with the Federal Reserve usable same day. Treasury bills option, American Stock Exchange contract size $1 million, 13-week T-bills, March, June, September, December, nearest 3 expiration month, trade at one time, expiration date, second business day prior to each exercise settlement date, normally Tuesday, exercise settlement day, the day to issue the new 13-week T-bills, expiration week, normally Thursday, expiration weeks, first week, expiration month, and the T-bill originally issued. Striking prices, T-bill option striking price determine the index similar to those who trade financial feature. The equity options of the course holders long calls profits price uses T-bills, however, they recorded on the yield basis because of the inverse relationship between price and yield. Decline the price of the yield rise, subtracting the bills discounts 100% of the index that developed, showing the price appreciation in fashion more filament the option trade. For example, 13-week bills currently at 8%, index price of 92, yield with a decline of 7%, index price of 93%, and the holder calls the 92 per striking price would have more value than the asset previous striking price. Added to 20 base point intervals will usually either with the current bill quote or 13-week T-bill rates at 8.2% would introduce a 91.6 or 91.8 and 92 to the bracket index of 91.8, and depending on the market conditions, striking prices interested at 50 basis intervals. Quotations are based for the each at $25, but a minimum of 3/4, a premium of 3/4 of a point, thus for 187.75, and then 295 worth at $7,375. In and out of the money amounts, calls are in the money with the market price with the jury higher than striking price, out of the money with the market price lower than striking with naturally the definition reverse put. For example, assuming the current 13-week bill yields 8.5% of the term of the May 90 90 at a call is the money converted to the yield of the index, and 100% of it by 8.5, 91.5% index price higher than the strike option money, whether the amount is in this case of 1.5, 1.5 points. Premium for the call is 3.85. Composition would have then 1.5 points over the intrinsic value, 2.3.5 of the time value with net premium for in the money option amount with which premium exceeds the intrinsic value called the time value. If the strike has been 92 for the premium of 1.05, the option would have been out of the money. The entire premium of 2.625 would represent a new premium. In other words, out of the money option, it has no intrinsic value. Alright, the aggregated strike price, because of the striking price derived, the annualized rate of return of the discount must be the annualized reflect the majority of a particular bill underlying option. For example, suppose one were asked how much cash would be required to exercise May 90 call and 90, striking price at 10% annualized discount, only a quarter of the discount amount. Apple to the 90-day bill would find the discount first percentage formula 100% minus 97.5% applied to $1 million face value. The contract produced the aggregated exercise price of $975,000. Treasury note options, American and Chicago Exchange. Contract size 100,000, principal balance specified noted. American currently lists option 10-year notes. Chicago currently lists option 5-year notes. Expiration site, American T-Notes, options trade only February, May, August, November, cycle 2 expirations, generally trading one time. Chicago Notes, option trade either January, April, July, October cycle, or March, June, September, December cycle. Expiration date, Saturday following third day, Friday of the month of the expiration date. Striking price, one option, intervals bracketing current market price of the note, for example, 98, 99, 100, quotations points of 32 in a second, each point equals $1,000, each 32nd equals $31.25, premium at 3/16 or 3/16 would rise 3/16 of the 32 to 3.5 at 100% of $3,500. Total bond options of Chicago, contract size $100,000, principal amount specific bond listed, expiration cycle March, June, September, December, 3 expiration month, trading at one times expiration day, Saturday following the third Friday of the month of the expiration month. Striking prices 2-point intervals bracketing current market price bond, for example 98, 102, 100, 102. Quotation same with the T-Notes, in and out of the money amount, same with the T-Notes. Aggregated exercise price, same with the T-Notes. Exercise settlement, same with the T-Notes. Foreign currency options. In 1982, the Philadelphia Stocks introduced trading options, 6 currencies: Dutch Deutschmarks, Swiss francs, French francs, Canadian dollars, British pounds, and Japanese yen. Recently, Chicago Board Option Exchange has been trading options, same currencies. The contract specification of the currency are listed following chart. Currency account, legal share of the interbanking foreign exchange trading. Bulk foreign currency future contracts, which are only 2 foreign exchange markets existing prior to the introduction of foreign currency options. That was chapter 9, options. Pretty cool chapter. Chapter 10, security analysis.